Welcome to my podcast where I discuss various topics related to Quebec and Canadian real estate. In each episode, I unpack a different topic to help you be more informed. In this episode number 2, I'll be discussing step 1 of 8 of my process to successfully purchase your next home. In episode 1, if you haven't listened to that one, please go back and listen to it. I gave you an overview of the 8 steps to successfully purchase your next home. In this episode, we're going to unpack step number 1, which was know your cost. So without further ado, let's get started. So like I mentioned in episode 1, there are 2 types of fee that you want to factor in your budget: recurring and one-time fee. So let's start by unpacking recurring fee. The first item that you want to forecast here, and the most obvious one, is your mortgage payment. And I recommend you use a mortgage calculator to be more efficient here. Now, some of you are gonna ask yourself, am I supposed to find the property and then calculate the mortgage that's gonna be on it? That's a wrong approach, in my opinion. You should first calculate what you can afford and then look for something that you can afford versus look for something and then find a way to afford it. That's kind of backward, and that's going to get you in trouble in the long run. So when you're playing with the mortgage calculator, you can go online and find one. You want to use different interest rate to help you anticipate future increase, and it will happen. Now, if you're in the States listening to this, in the States, when you guys take on a mortgage, let's just say that mortgage is amortized on a 20, 25, 30 years, your interest rate, if I'm not mistaken, is locked for that period of time. In Canada, that is not the case. So regardless of what length of time your mortgage is amortized, whether it's 25 years or 30 years, typically your interest rate will be renegotiated on average about every 4 to 5 years. You can lock the interest rate for longer than that, but it's usually very rare. People typically take 5 years, which means that for the life cycle of your mortgage, you're going to have different interest rate. And the purpose of this exercise, as many of you are probably realizing it, there's a lot of people that sign the mortgage with 1.5 to even 2.5%, and they're having to renew today at 6.5, potentially 7% interest rate. So that's why when you're calculating your potential mortgage payment, you want to use a different interest rate to see if you're able to absorb those increases that you'll inevitably have throughout the life cycle of your mortgage. So very important. So that was the first recurrent fee that you want to factor in. The next one is your mortgage insurance if you're obligated to take one. So in Canada and Quebec, if you're putting less than 20% down on your mortgage, your financial institution will force you to take on a mortgage insurance. And that premium will vary between 0.6% to 4% of your total mortgage amount. And the reason why the percentage varies, it depends on the proportion of the mortgage, meaning how much you're putting down. So the less down payment you're putting, the higher your premium will be. 4% being the maximum at the time of this recording. So let's take an example. If your mortgage end up being $400K and you're putting about 5% down, that means your premium is going to be 4%. So 4% of 400K, that's a $16,000 premium that will be added to your mortgage, which means that your new mortgage will be $416,000. And that's the amount that you want to use in your mortgage calculator when you're forecasting your budget. Okay? So that was the mortgage insurance. The next fees are the property tax and school tax. So here in Quebec, we have property tax and school tax that you're going to have to pay every year. They're usually come as separate invoices. I believe these fees are also applicable in other provinces, but they may be billed differently. And that tax is a percentage of your municipal assessment. So usually in my area, it's about 1% of your municipal assessment, not the sales appraisal amount, but really the municipal assessment. And it's something that is public, so you can go online. Once you find a property that you're interested in, you can find online what are the municipal and the school taxes. But because you're early in the process here, you can use about 1% of the fee of the property. So if you're looking for a $400,000 property, you can anticipate about $4,000 of taxes. And all the numbers that we're talking about, as you move ahead in the 8th step, you'll be able to refine those numbers to be more realistic to what eventually you're going to have to pay for. But obviously, these are these property tax and school taxes. You'll be paying for it throughout the time you're going to be an owner, even after you've paid the mortgage. The next recurrent fee are utility. So depending on your heating system, your heating cost is going to vary. So in Quebec, most of the property are heated by some kind of form of electricity mixed with maybe gas or oil, depending on how old the property is. If it's heated by electricity, which is the majority of the home, you can actually go on the Hydro-Québec website and see the historical heating bill of a specific property. So again, when you eventually find the property you want, you can refine those numbers, but you got to factor in the heating cost of the property. So obviously, the bigger the property and potentially the older the property, the higher the heating cost is going to be. The next fee are condo fees or common area fees. In the States, I believe you call them HOA fee. So so obviously if you're buying a single family home that does not have any common area, you don't need to worry about that. But if you're buying any type of property that has common area, you can expect to have condo fee. The most common one are condo apartment. So these fees vary. They can go from anywhere from like $20 to $800-900, maybe $1,000, depending on. So when you're going to be hunting for your next property, if you're looking for a condo, on the MLS sheet or on the whatever online sheet you're looking at, usually should list what condo fees they are, and those are usually paid on a monthly or quarterly basis. And expect that those fees will go up over time. The same for the property tax, by the way. I've for the last 6 years, mine have kept on increasing for all my properties. So again, that's why we're doing this exercise from the beginning. The next recurring fee are your property insurance. So again, depending on the coverage that you want to take with your insurance company, the cost will vary. Also, for example, where I'm located, we're not far from the river. So if your property is located in a flooding area or in an area that's potential for flooding, your insurance is going to be much higher than if it's not. And you can actually go online and look whether a specific property is in a flooding area in Quebec. So it's something important to look out for because it will impact your insurance premium. And as well, if you're in a flooding area, you want to maybe have some money aside in the event that you do get a flooding. So those were some of the major recurring fee that you're going to have to anticipate and factor it in your budget. That's not necessarily all of them, but these are the big rocks that you need to think about. Let's move on to the next category, which are the one-time fee. So there's a few that I will mention here. Again, this is not all of them, and you may not have to pay for all of the items I'm going to talk about today. Also, some important context. The fees that I'm speaking about are really for single family home, including condo. If you're buying multifamily, there are going to be other fees that you're going to have to consider. And even some of the fee I'm going to mention, even if they're applicable to multifamily, their price are going to be higher on a multifamily versus a home. So today's discussion is really more about single family or condo unit, townhouses, doesn't matter. So the first and the biggest one, which I believe is applicable throughout Canada, certainly in Quebec where I am, is called a land transfer tax. In French, we call this, ironically, taxe de bienvenue, welcome tax. And it's going to be the biggest bill that you're going to have to pay. To give you guys an idea, I recently closed on a $500K property, and the bill that I received from my city was about $6,500, so $6,500. So it is a hefty bill, and that bill usually comes 90 days after you've signed the deed of sale. So it's pretty quick. They don't really give you any grace period. It's, hey, we heard you bought something. Welcome to the neighborhood. Here's an invoice, right? That's how fast it is. You can go online to see how it's calculated. It is a progressive bracket. So example, the first 50K of the property, there's a 0.5% tax on it. And then for the amount that's between 50.1K to 250K, there's a 1%, and then it goes to 1.5%. And then if you're on the island of Montreal, so I'm in Laval, which is considered a greater Montreal area, but if you're on the island of Montreal, there is an additional percentage for above 500K, and more municipalities are introducing that new bracket as home prices are increasing. And one thing to consider that's very important, the tax, the percentage will apply on the number that is higher between the purchase price versus the municipal assessment. So if you've purchased a property that's below the municipal assessment, well, the land transfer tax will apply on the highest amount, which in this example would be your municipal assessment. So again, regardless of how you approach this, you're going to have to pay this tax. The second one-time fee is inspection. So if in your purchase offer you included a inspection condition, you're going to have to pay for that fee before you close on the property. Usually the inspector will charge you 48 to 72 hours, usually after they've delivered you the inspection report. In my neighborhood, they range between 400 to 700. So I've paid in the past, some I've paid 500, some I've paid 650, some I've paid 800, depending on the property you're buying. You don't want to cheap out on it, so do your research. Make sure you're working with a competent inspector. The cheapest is not necessarily the best here, okay? So that was inspection. The next one-time fee are property appraisal. Now, I've never had to pay for property appraisal. The only time I'm aware of that you may have to pay for this is if you're working with a mortgage broker that's getting you a loan from either a B or a C lender. Typically, if you're working with one of the major bank, if they want to do an appraisal, they will pay for it. And the only time they'll actually do an appraisal is if you're putting 20% or more down, which means that the mortgage is not insured. So in order to protect themselves, the financial institution will sometimes get an appraisal done to make sure that the price you're paying for makes sense and they're covered in the event that they need to take back the property. The cost for an appraisal is about $400 to $900, depending on the type of property, depending on how far the appraiser needs to travel, and so forth and so on. So again, you want to Google for the different professional in your area and see the prices. The next one-time fee, an obvious one, so the notary fee and the adjustment. So the notary fee in my neighborhood goes between 1,000 to 1,700 Canadian, obviously. Again, that could depend in your neighborhood. So you'll have to pay that bill. In addition, and that's usually have to pay that when you're signing the deed of sale. The other fee that you're going to have to pay at the notary or the adjustment. So earlier I talked about property tax as an example. So let's just say you have $4,000 of property tax on the home you're purchasing. Let's just say you're signing the deed of sale half the year, and the current seller has already paid for the full year, so they've already paid $4,000. If you're taking over half the year, the notary is going to charge you back for the second half of the year. So in this case, let's just say $2,000. So you'll have to pay that $2,000. Those are what we call adjustment during the signature of the deed of sale. So those are fees that you want to account for in addition of the notary fee. So the more you know, the less you're going to be caught by surprise, the less stress you'll have, and the more fun you'll have in doing the real estate transaction. Then you have moving fee. If you're hiring a moving company, you're going to have lease termination fee. So if you're currently leasing and you want to get out of that lease before the renewal date, depending on what kind of contract you have, you may have to pay certain fee to break the lease. If you currently have a mortgage and you're selling your home to buy this new home, depending on the circumstances, you may or may not have mortgage penalty, and they can be very hefty. So you want to look into that. So call your bank and have them give you the details of what those fees are. If you have to do any renovation, so if you've done your inspection and there's some serious problem that you need to address, you want to factor the cost of those reno, because typically if they're serious, you want to do them within the first 90 days of you taking ownership, because if you leave that lingering, it may cost you more in the long run. The next one, and often forgotten, condo fee special assessment. So when we talked about recurrent fee, I mentioned condo fees. This is different. So special assessment, in French, we call them cotisation spéciale. Basically, whenever a building is not in a great financial situation and there is a problem that needs to be fixed and there's not enough money in the bank account, the condo association may vote on a special assessment, and this is going to be a one-time fee that every owner of the building or the association will have to pay, and it's usually based on the percentage of ownership. They can be pretty hefty, and you will know that if you're looking to purchase a property that has a condo fee. When you're doing your purchase offer, a very important condition in the purchase offer is to get a copy of the building's financial statement and see how healthy the building is from a financial standpoint. And when you're revising those documents, you'll usually get a good idea on whether or not there's going to be special assessment. So you need to factor it in that budget, because those are above and beyond any condo fees that you're going to have to pay. So very important. And they can happen more than once. So you may have to pay, 2, 3, 4 special assessment, depending on what was voted on. So again, something that you want to factor in. The last but not least, you have furniture, appliances, and any tools that you want to buy, like a lawnmower, snow removal, whatever not. All these things you want to factor them in as part of your one-time fee. So again, these are not all the one-time fee that you're going to have to pay for. The idea is you sit down and you factor all your recurrent fee and your one-time fee for your particular situation. So I hope this was helpful. I'll catch you in the next episode where we're going to unpack step number 3 in our home buying process. Thank you for watching.